Okay, let's unpack this. Today, we're doing a special deep dive for you, and we're drawing from a really fantastic source, the Market Day book, June 20, 2025. And a big welcome, specifically, to StockTelescope.com. We've taken a close look at the latest insights you shared from the Market Day book, and yeah, we're ready to break down what's truly important. We'll be looking at today's market moves, economic shifts, and some pretty fascinating global news as well. Our mission here really is to give you a shortcut, help you get truly well-informed, highlight some surprising facts, and, the key implications from all this diverse material.
Absolutely. And what's fascinating when you look at the Market Day book for June 20th is just the sheer breadth of information packed in there. It's quite something. So we'll be connecting some dots for you.
Yeah.
From tech breakthroughs, obviously, to market performance, and even touching on some global political currents. The goal is really to help you see that bigger picture. Understand not just what happened, but crucially, why it matters.
Okay, so let's get started. Let's take a quick pulse check on the major indices for this Friday, June 20th. The S&P 500. Well, it saw a slight dip, down just 0.03%. Those actually up a tiny bit, 0.05% pre-market. Nasdaq, on the other hand, it nudged up 0.13% today. That was after a stronger 0.43% pre-market gain, and that Dow Jones also pulled back slightly, down 0.10%. So overall, pretty small moves, right? On the surface, at least.
Yeah, relatively modest shifts, exactly. But, if we connect this to the bigger picture, these small daily movements often mask some really significant movements underneath, within individual sectors, specific companies. And that's really where the Market Day book shines, giving you that more granular view.
Right. And that's where it gets really interesting. Let's dive into those individual stories from the corporate world today. Starting with some serious rally action, we absolutely have to talk about Circle, ticker CRCL. I mean, wow. Shares up nearly 50% this week. They're up over 500% since their IPO. And today, just pre-market, another 14% jump. This came right after the Senate passed a stablecoin bill. So that's an incredible surge. What exactly does that stablecoin bill mean for them? Why such a huge reaction?
Well, what's fascinating here is how directly a regulatory development like this can just pour fuel on market confidence. And, valuation, especially in emerging tech sectors like stablecoins, this isn't just about one company, Circle. It's really about a maturing industry getting clearer rules of the road. It potentially paves the way for much wider adoption.
Okay, that makes sense. Huge implications. Now, speaking of huge, SoftBank's Masayoshi Son, he's proposing a $1 trillion AI and robotics complex in Arizona. $1 trillion. That's an audacious vision, to say the least. He wants to partner with TSMC, attract U.S. government backing.
It really is audacious. And this raises an important question. What's the long-term play here? I mean, it speaks volumes about the sheer scale of ambition in the AI space right now. And it also highlights the critical role of government support and, crucially, supply chain partners like TSMC in making these kinds of mega projects even remotely possible. The logistics alone are staggering.
Staggering is right. And the race for talent in AI, it just doesn't stop. Look at Meta, Facebook's parent. They failed to acquire that AI startup, Safe Superintelligence, valued at a massive $32 billion, by the way. But get this, they're hiring its CEO, Daniel Gross, and the ex-GitHub CEO, Nat Friedman. Plus, they're taking a stake in their venture capital firm, NFDG. So they couldn't buy the company, but they're basically getting the brains behind it. Smart move.
Oh, absolutely. What's fascinating here is that in this AI arms race, sometimes acquiring the top talent, the human capital, is just as valuable, maybe even more valuable, than acquiring the whole startup, especially when valuations are, frankly, astronomical. It's a more agile way to inject that top-tier expertise right into their existing teams.
Yeah, makes sense. Now let's shift to hardware for a second. Texas Instruments, TXN. They just announced a massive $60 billion semiconductor investment. This is all about expanding U.S. chip production, creating something like 60,000 jobs in Texas and Utah. There's political pressure, competition from China. Talk about bringing jobs home and boosting national security at the same time.
And if we connect this to the bigger picture, this is such a clear response to those global supply chain vulnerabilities we've all become aware of, and yes, those geopolitical tensions. This investment isn't just about making more chips for TXN, it's really about building national resilience in a critical sector. It's a strategic de-risking move.
Absolutely strategic. Okay, shifting gears a bit. Honda, cars, motorcycles. Well, they had a successful reusable rocket launch and landing today. It's a key step towards suborbital flight by 2029. Commercial plans still undecided, though. Honda doing rockets now, that's quite a pivot.
It is. And what's fascinating here is how the landscape of private space exploration is broadening. It's not just the usual suspects anymore. It highlights how these established industrial giants are looking to venture into totally new frontiers. Though, as you said, the commercial viability, it's still a big question mark for them.
Always a question mark with space, it seems. Now, someone who's always thinking bigger, Elon Musk and X, formerly Twitter, they're planning to launch investment and trading features on the platform. There's a digital wallet, X Money, debuting in the U.S. this year, maybe even a credit or debit card down the line. Elon's definitely not content with just social media, is he?
Not at all. And this raises an important question about that convergence we're seeing between social platforms and financial services. It's a huge trend across the tech world. They're aiming to create these super apps, where users can basically do everything, chat, shop, bank, invest all in one place. X wants a piece of that pie.
Yeah, the super app race. And sticking with Musk for a moment, Tesla, TSLA, they just inked a $557 million deal in China. It's to build their first grid-scale energy storage station over there, partnering with Shanghai authorities and a local company called China Kangfu. So Tesla's footprint expanding in China, but beyond just the cars this time.
Right. And if we connect this to the bigger picture, it clearly shows Tesla's strategy to become a much broader energy company, not just an EV maker. That's been the plan for a while. And China, given its massive energy needs and push for renewables, is just a critical market for these grid-scale battery solutions.
Okay, so lots of tech and future-focused stuff. But let's talk about something maybe a bit more down to earth.
Yeah.
Darden Restaurants, DRI, parent company of Olive Garden Longhorn Steakhouse, they actually beat their Q4 estimates. Good earnings per share, 2.98 cents, solid revenue at $3.3 billion. Driven by strong same-store sales at both those chains, they're forecasting 7-8% revenue growth for fiscal 2026. Shares gained 2% pre-market. So amid all the tech hype, good old Olive Garden and Longhorn are still thriving.
They are. And what's fascinating here is that resilience of consumer spending, specifically on dining out, even with all the talk about economic uncertainty, it suggests that certain segments of the service industry are still very robust. People are still prioritizing those experiences, it seems.
Breadsticks endure. Okay, one more corporate story. This one involves a bidding war. Home Depot, HD, has jumped into the fray against QXO for GMS. That's a building products distributor. QXO had made a $5 billion cash offer. GMS shares popped 10.6% on the news. So a good old-fashioned corporate takeover battle heating up.
Exactly. And this raises an important question about consolidation within the building materials supply chain. It's heating up. Companies are clearly looking to secure their supply lines, expand their market share. It actually signals some confidence, maybe, in future construction activity if they're willing to fight over distributors like GMS.
Interesting angle. Okay, so we've seen the big bets, the bold moves. But it's not all smooth sailing and big deals, is it? The Market Day book also highlights some pretty significant challenges. And we have to start with Boeing, BA. The NTSB issued a rare safety alert today. It's over the 737 MAX jets again, this time a risk for cockpit smoke potentially coming from engine damage. Boeing and GE Aerospace are working on fixes, they say. But then you look at the Paris Air Show numbers. Airbus got 132 firm orders, Boeing only 41. Just feels like another blow for Boeing's reputation and, well, their bottom line.
It really does. And what's fascinating here in a worrying way is the compounding effect. You've got these persistent safety concerns layered on top of intense competitive pressure from Airbus. This raises a really important question about the long-term impact, not just on market share, but on public trust in the Boeing brand itself. It's a tough spot.
Very tough. And speaking of things not going to plan, SpaceX had another setback with Starship. An explosion during fueling, apparently, before a test flight down Texas. This comes after several prior failures, too.
And if we connect this to the bigger picture, it's just a stark reminder, isn't it? Even for the most advanced companies like SpaceX, aerospace development is inherently risky. It's iterative. Failures are, unfortunately, part of the process, a costly part, but part of pushing those technological boundaries.
Right, a necessary, if painful, part of innovation sometimes. Now, on a much more serious and concerning note, there's a listeria outbreak. It's linked to chicken pasta meals sold at Walmart and Kroger, major retailers. Sadly, it's caused 3 deaths and 17 illnesses across 13 states. The producer, Fresh Realm, has issued a nationwide recall. This is a serious public health concern, hitting major supply chains.
It really is. And what's fascinating here, but also deeply concerning, is the vulnerability it exposes within our really complex food supply chains. It just highlights the massive ripple effect when a single producer has a major issue like this. It impacts the big distributors, and most importantly, it impacts public safety, a stark reminder of the trust we place in that system.
Absolutely. Okay, let's broaden the lens now, beyond just corporate headlines. The Market Day book gives us a crucial look at the global economic landscape and some key political decisions, too. First up, the Fed. The Federal Reserve held interest rates steady today, 4.25 to 4.5%. They cited rising uncertainty partly due to tariffs. Notably, former President Trump criticized Fed Chair Powell over this. Officials also projected slower GDP growth for 2025, only 1.4%, and higher unemployment, 4.5%, plus higher core inflation at 3.1%. So, rates unchanged. But that forecast sounds a bit gloomier, doesn't it?
It does. And what's fascinating here is seeing the Fed trying to perform this delicate balancing act. They're fighting inflation, yes, but also navigating external pressures, tariffs, political criticism, you name it. The revised projections clearly suggest a more cautious outlook on future economic performance, maybe a sign they see those headwinds sticking around longer than hoped.
Yeah, caution seems to be the word. And as always, geopolitics hitting our wallets. Oil prices fell today. Brent crude dropped 2.4% to around $76.96 a barrel. Though it's worth noting it's still up about 4% for the week. This drop apparently came as the U.S. delayed a decision on potential involvement in the Israel-Iran conflict.
Right. And if we connect this to the bigger picture, it just underscores, again, how sensitive global energy markets are to any geopolitical development or even the lack of one. Just a hint of de-escalation or even just delayed action can move prices significantly. Shows the anxiety baked into the market.
Definitely. Now, turning over to the UK economy, seems like they're feeling some economic chill over there. The Bank of England also held rates steady at 4.25%, but they did signal possible cuts, maybe as early as August. This is amid slowing wage growth and weak business investment. And underscoring that, UK retail sales actually fell 2.7% in May. That's the steepest monthly drop they've seen since December 2023. Sounds like the UK is slowing down.
It does, and this raises an important question about the speed or maybe the unevenness of the global economic recovery. Those retail sales figures especially are a pretty clear signal of slowing consumer demand, and that often comes before a broader economic downturn, so one to watch.
Yeah, definitely. Now let's jump over to Japan. Core inflation there hit 3.7% in May. That's the highest since January 2023. And get this, it was driven in large part by a 101.7% year-over-year surge in rice prices, just jaw-dropping. The Bank of Japan held rates at 0.5%, but warned price pressures remain elevated. Wow, a 100% jump in rice prices. That's got to be hitting consumers hard.
Oh, absolutely. And what's fascinating here is seeing these persistent inflationary pressures, even in an economy like Japan's that for decades struggled with the opposite problem, deflation. It really highlights how global food supply issues and commodity prices are impacting everyday life everywhere. It's not abstract anymore.
No kidding. And speaking of economics, a couple of U.S.-specific items. The Supreme Court today upheld Tennessee's ban on gender-affirming care for minors. This signals support for similar laws in, I think, over 20 other states now. A very significant legal decision with broad implication.
And what's notable from a structural perspective is how a single ruling from the highest court can just reverberate across so many state legislatures, directly influencing policy nationwide.
Right, and another legal ruling involving executive power. An appeals court allowed President Trump to retain control of California's National Guard amid ongoing protests in L.A. This backed his earlier federalization order from June 7th.
Yeah, and this raises an important question, really, about that balance of power between federal and state authorities, particularly when it comes to deploying military assets like the National Guard during times of civil unrest.
Definitely a complex issue. Now, one last economic point from the U.S. national wealth. Apparently, the U.S. added 379,000 millionaires in 2024, driven by strong markets, stable dollar, brings the total count now to 23.8 million millionaires. So despite some of those gloomy economic forecasts we mentioned, the wealthy seem to be doing quite well.
Yeah, and if we connect this to the bigger picture, it suggests that while those average economic indicators might show slowdowns or headwinds, certain segments of the economy are still generating significant wealth, particularly those segments tied closely to equity markets and asset appreciation. It points to maybe a growing divergence in economics experience.
Interesting divergence indeed. Okay, let's take a quick look now at some notable stories specifically coming out of Europe. First, a Starlink rival, Eutelsat, that's a French satellite operator, ticker ETL on the EPA exchange. Their shares surged 22% today. Why? They announced a $1.55 billion capital raise backed by the French government to support low Earth orbit satellite investments. Plus, they landed a 10-year French military contract. So, competition in satellite internet is definitely heating up globally.
It really is. And what's fascinating here is Europe's clear strategic investment in developing its own independent space technology. It's about competing with Starlink, sure, but
Yeah.
it's also heavily driven by national security concerns, as that military contract shows. They want sovereign capability in orbit.
Makes sense. Okay, also in France, Netflix, NFLX signed a deal with the big French broadcaster TF1. They're going to stream live and on-demand TF1 content in France starting summer 2026. The goal is expanding viewership and boosting ad revenue for Netflix. So Netflix trying new tactics beyond just subscriptions.
Yeah, and this raises an important question about the evolving strategies of these big streaming giants. Partnering with a traditional established broadcaster like TF1, it indicates they recognize local market preferences matter and maybe signals a move beyond purely subscription models towards more hybrid approaches, incorporating ads and local content partnerships.
Interesting evolution. Now, over in the UK, Apollo, the private equity firm, APO, is stepping up. They're supplying a huge $6 billion unsecured loan to a delayed UK nuclear power plant project. That's apparently one of the largest private capital investments ever in a British national infrastructure asset.
Private capital really filling a gap here.
And if we connect this to the bigger picture, it really highlights the significant and growing role that private financing is playing in these massive national-scale infrastructure and energy security projects.
Yeah.
Especially, when public funds might be constrained or slower to move. It shows confidence, but also shifts the dynamics of who funds and controls critical assets.
Right. And one last European item, unfortunately, a cyber attack. UBS, the big Swiss bank, confirmed a data leak. It affected tens of thousands of employee records. Apparently, it happened because of a cyber attack on one of their suppliers, a company called Chain IQ. Good news is, no client data was compromised and operations weren't affected, but still. Yeah, still concerning. And what's fascinating, or maybe cautionary here, is the vulnerability exposed through a third-party supplier. It's another reminder that cybersecurity isn't just about locking down your own systems. It's about the entire ecosystem, all your partners and vendors, too.
The weakest link, right?
Exactly. The whole supply chain risk applies to data, too. Okay, finally, let's wrap up with a quick look at two key earnings reports that came out today. First, Accenture, ACN. Revenue came in at $17.7 billion. That's up almost 7.5% year over year, and it beat estimates by $380 million. Their earnings per share, $3.49. That's up over 11.5% year over year, also a beat by 17 cents. Pretty strong numbers from Accenture.
Very strong.
Then on the flip side, the Kroger Co., KR revenue was $45.12 billion. That actually missed estimates by about $260 million, though their EPS, 1.49, did manage to beat estimates, but only slightly, by 4 cents.
And what's fascinating here is that contrast, right? You've got Accenture showing really robust growth, clearly benefiting from strong demand in consulting, tech services, digital transformation. And then Kroger, a major grocery retailer, with that revenue miss despite beating slightly on earnings, it really points to different pressures across sectors. Tighter margins, intense competition in grocery maybe. It gives you a glimpse into where corporate spending is strong versus where consumer wallets might be feeling more pinched.
Yeah, a tale of two sectors almost. Okay, so now we've covered a huge amount of ground today, haven't we? From that incredible surge for Circle thanks to regulatory news to the really complex challenges facing Boeing and all those broader economic currents shaping our world, right down to that crazy jump in rice prices in Japan. So what does it all mean? My final provocative thought for you today, after digging into these sources from the Market Day book, is this. Consider how deeply intertwined everything seems to be now: technology, geopolitics, even basic consumer preferences. How much are they shaping market outcomes together? Are we really entering an era where maybe technological leaps and geopolitical stability become the key drivers of wealth creation? Or will those traditional economic fundamentals, inflation, interest rates, GDP growth, still reign supreme in the end? Something to think about.
That's a great question, and it really raises another important one. How will all these seemingly disparate pieces of news we discussed today, from AI funding to stablecoin bills to food safety recalls, how will they ultimately converge? How will they redefine the business landscape, maybe even faster than we think, in the coming years? Keep thinking critically about those connections. That's where the real insights often hide.
Absolutely. Well, we hope this deep dive has given you some valuable nuggets of knowledge, maybe sparked an aha moment or two for you. And if you found this useful, please remember to subscribe to the deep dive wherever you get your audio. It really does help us bring more of these curated explorations directly to you. So until next time, keep learning, keep questioning, and keep digging deep.